And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters series podcast. ABSA is an authorized FSP and registered credit provider. Good evening. Welcome to the program this evening. Well, it's been a very busy day. Started, of course, last night with a series of, I don't know if I call them tweets, posts on the Truth Social network owned by Donald Trump. The tweets were from Donald Trump, the U.S. president-elect, saying that he would impose tariffs on China, Canada, and Mexico the day that he became the U.S. or to put it in better language, he would issue executive orders and the process would start from there. That, of course, set the tone for much trading on many markets today. The dollar a lot stronger, particularly compared to the rand, as I talked to you, as a result of all of that. Lots of corporate news coming through. Pepkor confirming today that in the last financial year, they sold 11.5 million cell phones. And it's just a staggering number of cell phones. There's so much in the economy around cell phones, and that tells you so much about what's happening in the economy. But 11.5 million, that means that roughly 1 in 10, more than that, but essentially a very high proportion of people got a new cell phone for some reason last year. And there's a lot of churn. Phones get lost, phones get broken, phones get stolen, but there's a lot of churn in the market, I'm sure. Many of them prepaid handsets as well in some way, shape or form. But still, 11.5 million is just a staggering number. Vodacom confirming this afternoon that it is going to go to court to challenge the decision by the Competition Tribunal that it could not go ahead with the massive deal, which would prevent it from working with Vumatel. This is all about the fiber strategy of some of the big companies. I mean, if you've been watching Vodacom's share price after that decision came through from the Competition Tribunal about a month ago now, Telkom's share price was almost tracking it at one point, just simply because so much rests on the strategy that people are going to follow. No surprises that they're going to appeal that. I suspect it'll go to the Constitutional Court in the end. They've had a busy day today. But it does just tell you how long this process takes in a very fast-moving environment. And I mean, in the meantime, by the time you get finality on this, Starlink, which was not an option at all when this strategy was being started, could suddenly just arrive and actually be live in South Africa. And then the economic case for doing what Vodacom and Vumatel wanted to do may not be there, simply because it's taken so long. It does just tell you, some of the problems that you have doing business and following a strategy in South Africa. I think there'll be a lot of conversations about that over the next little while. I wouldn't be surprised if that's what happens. We'll speak to African Bank in a few moments. Their attempt to diversify their offering, I like the way they're doing certain things. So, for example, they're giving home loans to their staff as a pilot project to then eventually do home loans probably in the next year or so, I understand, to the general public. And, of course, home loans, completely different sort of financial system from the normal loans. But I do wonder about entering banking when banking is so busy. I mean, you have to take on Capitec for a start, and some of the bigger banks are finding that difficult. But you also are coming into a sector that suddenly has got, strangely, quite exciting. Not really what you expected to happen, that it would suddenly get exciting, but there you are. You suddenly are seeing what's happening with banking at the moment. Many more entrants doing many more different things. And that, I think, is proving to be very interesting as well. Well, we'll follow that up as we go through the evening together, you and I. And there's plenty more to come as well. And, of course, there's been news from First Rand News as well, from Anglo-American Platinum as well in the next little while. We'll be looking at that. The Vukile Property Fund, they put out results today. They had a 6% increase in their interim cash dividend. Their vacancy rate is 1.9% at the moment. They seem to be making a lot of progress in actually making sure that all of their properties are full and occupied. This has been quite difficult since the pandemic for some companies. But you get a sense that they are being able to pull it off, and a large part of it is also the sheer amount of money that they're going to be spending on solar power. So even though load shedding has stopped, and you heard, of course, from the CEO of the Netcare Group last night about how they're spending less money on diesel, but they aren't really seeing any difference to their actual results because the price they're paying for grid electricity is now so high. And that issue is still, of course, going to continue for some time. 011 8830 702 021 446 0567 and voice notes this evening on 072 702 1702.
702.
702.
Stephen is on the Money Show.
6 to 8 p.m.
African Bank reporting today it's made a net profit of 523 million rand for this financial year. Describes that as a strong performance in a difficult climate. The bank trying to diversify its operations, preparing to launch an IPO in 2 years' time. Anban Chetty is the Chief Financial Officer at African Bank. Anban, good evening. Thanks for your time. It's a strong set of results, a very competitive sector during a difficult time. How difficult was it to achieve these results?
Thanks, Stephen, for having me on the show. Yeah, it's extremely difficult, I think, where consumers are under pressure. I think what we've really done well this year is that we're certainly diversifying our balance sheet. As you can see, our business and commercial unit grew their net advances 15%. Personal banking, we really tightened our credit, and we only grew by 4%, resulting in a net advance of only 8%. So from an asset perspective, was really muted. Where we've benefited is that we've certainly got a deposit franchise that now contributes 92% of our balance sheet. So that's really exciting. So clients are really saving from a business and commercial and personal banking. But as we diversify into secured products, you'll see we've dropped our net interest income and net interest margin really deliberately. But the highlights of the results has really been the growth in our non-interest revenue as well as insurance income. And our clients growing by 36% to 5.4 million. So really strong set of results. And we really monitored our credit risk monitoring. Our credit loss ratio is down 6.3%, coverage ratio down 24.2%, and credit impairment charge down 20%. I think all that gives us that 523 million you spoke about, Stephen. So really pleasing results for us.
I mean, there's a lot of aggressive competition. I mean, you have to take on Capitec, and some of the players who are bigger than you are finding them difficult to compete against. I mean, you are a little smaller than some of these players. Could that make it easier in some niches and harder in others?
Yeah, I think the competition is certainly out there. I think what we've really worked for us is that we've got a branch network of 436 presence across the country. So that really helps us. The demand for credit is there. We get over 100,000 credit applications a month. Roughly 70% of those come through our branch network. And what that does for us, it opens the opportunity for our consultants to also cross-sell. Because we're not just selling credit. We're selling a lot of our My World accounts. We've got investment accounts. We've got funeral. So there's so many products that we're doing in our branch network that gives us a huge competitive advantage. And we've also got the app and the call centers. So our philosophy is the client must choose the channel rather than pushing a client into a channel, which I think really helps us in this competitive landscape.
You could find, as part of this competition, that actually you want a bigger call center. Even though it's more expensive, you'll retain some clients who are tired of doing it on the app.
Absolutely. So that's exactly the philosophy we're following is have the right amount of volumes in your call center, the app, which is effectively a branch in the pocket, and our branch network of just over 436. So it gives you the opportunity to flex around depending where your client base is as well. So we're really trying to put the client in the center of whatever we're doing.
You're currently granting home loans to your staff. It's part of a pilot project. You want to launch home loans to the public next year. How's that going? I mean, it's quite a different financial project from the other loans that you do.
Yeah, absolutely. I think as we speak on diversifying our balance sheet, it's not just about personal banking and business and commercial. Within personal banking, we also want to diversify into secured lending. Home loan is definitely the first product we want to launch because that's normally the largest credit that a client would have. And generally where you have your home loan, you would normally have your transactional account as well. So that's also a way to ensure that we can keep that loyalty and that stickiness with our clients as well while delivering that service. The book is currently 100 million with our staff. And the reason for piloting with staff is at times you really want to pilot and at times make mistakes with your clients who are giving you feedback, telling you the process where there's friction, making sure we're giving the best client experience so that when we do go to market, our client experience is superb. And that's something that can deliver loyalty as well so that we have that stickiness and clients will put us first in wallet as well to make us their primary bank.
It's very interesting. I mean, staff will feel it in all sorts of different directions. There's been a lot happening around your group. You've taken over certain assets from Grootes. I think it was worth 500 million rand. Yeah. Have you been able to properly integrate all of that into your portfolio? I mean, it's quite a big chunk.
Yeah, I think, Stephen, I think you're referring to Grootes was close to about 12 billion that we purchased about 2 years ago. We acquired two businesses of SASFIN, one being the commercial property finance. That was just around 500 million. That came in this financial year. The capital equipment finance is coming in FY25. We just closed that, so that will come onto our balance sheet of just under 2 billion in FY25. So really exciting to have that further diversification of our balance sheet as well into more secure products.
You're planning your IPO. I mean, I don't know if it's been pushed back a little bit, but let's say the next 2 to 3 years. Planning for that, I mean, that's going to be a big moment for you.
Absolutely. And that was really deliberate. What we've done with the IPO is that we're doing it in two phases. We're calling it a pre-IPO. And what the pre-IPO is going to entail is we've done a 10% staff share scheme, which dilutes the existing shareholders, where we've given all our staff members, irrespective of tenure, seniority, equal share in the company. What we're going to be doing over the next 2 years is looking at doing a management scheme as well as a strategic partner scheme. The Government Employee Pension Fund has noted themselves as a strategic investor, and they will come on as shareholders as well. And we're aiming to do that in the next 2 years. And the back end of FY27 into 28, that's when we'll do the traditional IPO. And by then we've already got the shares into the right hands and the heritage that we want to get it into. And it takes away the overhang of doing a BEE transaction once you have the IPO, because that just creates further dilution. So I think in terms of timing, we're really planning to do the pre-IPO and the post-IPO as such.
Thank you very much indeed. Anban Chetty, Chief Financial Officer at African Bank.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, the Life Healthcare Group confirming today its revenue up by nearly 13% year on year for the year to the end of September. The main reason, or one of the main reasons, its international operations called Life Molecular Imaging saw its revenue grow by 180% through a massive surge in the number of doses of a product called a positron emission tomography diagnostic imaging tracer. Peter Wharton-Hood is the CEO at the Life Healthcare Group. Peter, good evening. In South Africa, your paid patient days were up 1.6%, occupancies nearly 70%. You must be seeing a strong demand for your services across the board.
Yeah, thank you. It's been a tale of halves. We had a really tough first half. In fact, we had a really tough first quarter of our financial year. And thankfully, our strategy, which we put in place some 18 months ago to become the country's largest hospital network provider, paid off in the second half of the year, and occupancies ramped up. And in so doing, the year has proved to be a good outcome for us.
Your positron emission tomography diagnostic imaging tracer, it helps diagnose patients who are thought to maybe have Alzheimer's disease. I mean, how does that work? Clearly, there'll be a massive market for that for a long time.
Well, it's all in the world of pharmaceutical and radio diagnostics. And in fact, what we've done is we've created an isotope called Neuraseq. You inject it into the patient's bloodstream. You allow it to circulate around the body. And that specific isotope will attach to the cells of the root cause of Alzheimer's disease. Put in very simple speak, bearing in mind I'm an accountant. So what this allows neurologists to do is to get a definitive diagnostic of the actual underlying cause of Alzheimer's in the patient's brain. We're one of only three companies in the world that have access to this technology, which has been invented and refined by our own scientists. GE Health and Lilly carry the two competing products. So we're up against the big gorillas in the US market, but so far so good.
I mean, I would imagine you could foresee a big market for that for a long time to come in many parts of the world. I mean, this will be a big, big product for you.
It is, and we've got distribution agreements lined up in 47 countries around the world. But for the moment, our emphasis is in the United States, because you need three things to work for the marketplace to be in our favor. First of all, you've got to have the diagnostic. Well, we can tick that box. We've got it. Second of all, you need to have a cure for Alzheimer's that's been approved by the regulatory authorities. And there are 2 approved cures for Alzheimer's disease in the United States market. And thirdly, and most importantly, you need the medical aids to have agreed to pay for the therapy. So once you've got the diagnostic, you've got the therapy, and you've got a medical aid that will pay for it, your market dynamics are complete, and that's why it's taken off as it's done in the year under review, because all the building blocks are now in place.
The numbers are certainly adding up for your financial position. You've increased your dividend, you're declaring a special dividend, but financially you do seem to be in a very good space. I mean, obviously you're feeling very confident about it.
Well, one must also acknowledge an element of luck that comes into good fortune, that this was in part design. When we sold the Alliance Medical Group, it gave us a significant financial restructuring of our balance sheet. We were in a position to use the proceeds because we sold that company at substantial profits. We used the proceeds to wind down our international debt almost completely. And we still had enough money to be able to pay a handsome special dividend early in the year back to shareholders. That allowed the balance sheet to start restructuring. In the context of where we went from there, a healthy outcome in our South African business, coupled with the RM2 out-licensing transaction, which took place internationally, allowed us to further bolster our balance sheet and put us in a position to pay another special dividend to shareholders. So yes, we're very pleased with where the balance sheet is currently sitting.
You're adding some more beds in the forthcoming year. You're continuing to build that new hospital in the Western Cape. Peter, I mean, you're the CEO of a healthcare group. I have to ask about the NHI. You're still confident of a place for the private healthcare sector in South Africa?
Absolutely. If there's a dream to come with combined with a wish, is that we need collaboration between public and private. Private has a role to play in the successful outcomes envisaged in the NHI. We're currently running with spare capacity across all, and I speak for my competitors at the same time, across all our hospital groups. And we know that demand for services exceeds available supply in the public sector. There must be a way that we can collaborate. And I've got a long history in banking. I keep referring back to how the big five banks and the central bank collaborated on the financial sector charter all the way back in the late 90s. There must be the opportunity for the big healthcare groups to sit down with the Department of Health and come up with a constructive engagement model to move forward together. It's in the best interest of the country. It must be possible.
Peter Wharton-Hood, thank you so much for the time tonight. CEO at the Life Healthcare Group.
The Money Show.
The markets.
Ryan Hills, Head of Fundamental Sales at ABSA CIB. Ryan, good evening. Thanks so much for coming in tonight. Woke up this morning, went online, saw Donald Trump, saw trade, saw tariffs. Slightly surprised in a way the JSE ended up on the day.
Yeah, thanks, Stephen. Good to be here again. Yeah, I mean, up about 0.5%. Although quite a sort of scattered bag when you start going through some of the stories that were unfolding over the course of the day. I mean, starting with Richemont, for example, that stock was up 2.5%. It seems as though this idea that China's waiving the visa requirements for more and more countries is expecting to see more traffic through to its country, and as a consequence, some perhaps increased buying activity across the board, and specifically in the luxury goods space as well.
Pep called quite a strong update from them. I mean, they sold 11.5 million cell phones, but their furniture, which has always been strong, but their clothing department doing pretty well too. And when you consider the competition in that space, they seem to be pretty strong. Yeah,
the market really liked those results. The stock was up 5%, partly because they've gone from making a loss a year ago to making a profit now. But the other unfolding story is one that you've just touched on, which is it appears that perhaps buoyed by the two-pot system, there has been very significant sales momentum for a variety of the retailers. Pep themselves basically saying that their clothing and general merchandise sales were up 16% in the 7 weeks to the middle of November. So that's a very robust performance. And we've seen actually very similar news come out from Mr. Price and Fushini as well recently.
Mr. Price really did very well last week. You talk about a day of scattered stories. I mean, the afternoon sense was almost as busy as it was this morning.
Yeah.
There was the Vodacom announcement, but also more from Anglo-American Platinum and selling more shares, of course, in Amplats.
Absolutely. So they've indicated a while ago that they'll be essentially decreasing their stake in Amplats. This is an accelerated book build. So interestingly, the book build closed within about 15 minutes of being launched, so clearly lots of appetite out there for the PGMs, specifically for Amplats. They also indicated that they expect the demerger to be completed by the middle of 2025 and that they're not expecting to sell any further shares between now and then. So, yeah, I think that's been well flagged to the market. And as I say, lots of robust demand out there for the PGMs.
It's interesting that there's so much demand for the PGMs. I mean, the platinum price itself has just been heading lower this week. Obviously, it's not the only price in that market, but it's surprising, well, to me as a layman, but there is still support for PGMs at the moment.
Yeah. So investors typically think about the basket price for PGMs. You've got platinum, you've got palladium, and then you've got rhodium, which we don't often speak about. Rhodium in particular has been extremely volatile over the years. I think it's been as high as $30,000 and down as low as $600. But it's the palladium price at the moment. There's been a bit of support for palladium prices, partly driven by a slightly weaker US dollar. And that seems to have buoyed, for example, Impala today, which was up 4%.
I suppose the fact that Trump is taking over from Biden, which may mean no US sanctions or G7 sanctions on palladium, is part of it. Everyone's kind of holding their breath for Boxer on Thursday. I saw a headline today saying that it's the listing of the year. Not many listings, but yes.
No, look, a very exciting event, of course, for us as market participants as well. Huge demand for the share out there amongst institutional shareholders. Certainly a very strong growth story. Expected to at least emulate some of the growth that we've seen in ShopRite. Coming into about a 25 billion rand market cap. Some indications are we could see it rally as much as 20% on the day of listing. A very well-run business and great to see listings coming through again.
Looking at our producers when I suggest that maybe the CEO of Boxer should be on the radio on Thursday. Ryan Hill, thanks very much indeed. Head of Fundamental Sales at ABSA CIB with The Money Show, 6:30.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters series podcast. ABSA is an authorized FSP and registered credit provider.
011-883-0702, 021-446-0567. Your calls tonight. The private healthcare sector has been in the news a lot. We spoke, of course, to the Life Healthcare Group a little earlier yesterday, the turn of Netcare. All of them seem very confident that they will survive the NHI, or that it won't happen, or that there will be a space for them in some way, shape or form. I don't know if you have a strong view on that, one way or another. Of course, the NHI still grinding its way in some ways through the courts. We'll talk public procurement in a little while. I mean, from time to time, people will say we need to change procurement, we need to do away with tenders. And I'm sorry to be this guy, but I think tenders were brought in to solve a problem. If you take away tenders, your problem comes back and you're going to end up with something that looks very much like a tender but with a different name. And so it's not an easy thing to solve. Public procurement, government procurement is so important. There's so much money. You need a transparent system. You need a system that everyone understands. And yet still, I think those who are connected are going to benefit somehow. And I think that's going to be one of the big fundamental problems going forward. We look at that a little bit more after 7 o'clock tonight.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, from time to time in the EWN bulletins, you'll hear important cases in our courts relating to climate change, relating to the environment. There's actually a Centre for Environmental Rights that's often involved in cases around Eskom, for example, the amount of pollution they and Sasol and others put into the atmosphere. Well, we're not the only country where this happens. In fact, there's a famous case in the Netherlands going back several years where a local court ordered the oil company Shell to contain the emissions and carbon its products pumped into the air. An appeal court has rolled back some of that victory, but it does show you how activists and lawyers are able to make a lot of progress when maybe politically they aren't able to do the same. Natalie Scott is the head of sustainability at Werksmans Attorneys. Natalie, good evening. I mean, I remember this a little bit. It was 2019. This court held that Shell had a responsibility to the environment. This appeal court ruling, does it roll that back a bit?
Stephen, and to your listeners as well. Yes, it does roll it back a little bit in terms of the obligation to reduce your greenhouse gas emissions and whether or not that is actually enforceable against a particular company. I think the initial judgment that was handed down in 2021 basically compelled Shell to reduce its greenhouse gas emissions by a net 45% by 2030. And then when they appealed that, the court found that you cannot compel a particular organization or a company to reduce its greenhouse gas emissions, whether it's by a percentage or otherwise. So that was one of the outcomes of the court judgment. But there were some very positive things that did come through from that judgment as well. And I think we've also seen some of the developments at COP29 in terms of how the greenhouse gas emission reductions are actually going to work.
So, I mean, it's fascinating that often this is not happening through a political process. This is happening through a legal process. You see it happen here. There's no party that's done well in elections and really campaigned against greenhouse gases. They all do. It's in most of their manifestos, in the ANC, the DA, the EFF and others. And yet it's not a primary thing. Is that so? I mean, is basically the law all you're kind of left with? It doesn't become a big political issue in this country, and so lawyers are using the Constitution and they're doing what they can with it.
Yeah, that's exactly right. And that's exactly where we would find jurisdiction in South Africa in this particular regard. So it goes back to the social compact, it goes back to the Bill of Rights in terms of Section 24 of our Constitution that very explicitly entrenches the environmental rights. And one of the things that the court did mention in the Shell judgment was the obligation and the requirements for companies to reduce their greenhouse gas emissions, specifically with the bearing in mind that they do have a duty of care and they do have a social responsibility to reduce their greenhouse gas emissions.
Companies have rights too. It's the Money Show, Natalie. And they will have important defenses. They'll be able to say, look, there is a market for diesel. There is a market for electricity. We have to make it. We actually have an obligation to provide it. People have a right to buy it from us. Those are strong arguments. You can't ignore them.
Absolutely. No, I think that's a very important component. But I think one of the things that has come out of this particular judgment was that it says that polluters have the power to prevent dangerous climate change. And this is all predicated on demand and supply. And the argument there is that for so long as there is supply, there will be demand. So what they are saying is you actually have to reduce your supply in order for other companies, and particularly companies within your supply chain, to reduce the demand.
Can someone simply argue that if you stop me from providing fossil fuels to my customers, the economy will collapse? I mean, that's essentially the argument Eskom's used many times, that we need, if I remember the arguments correctly, around their stacks at, I think, Medupi and Kusile, it might have been Kusile, that we demand the right to continue to break the law, emission standards laws. They said this to the Environmental Affairs Minister, simply because otherwise the economy will collapse because we don't provide enough electricity.
Correct, and I think that was borne out in the numbers that we saw that were coming through from the economic assessments. But I think the other aspect of that also then needs to be borne in mind is that what has happened is that we've seen a proliferation of renewable energy sources that have been brought to bear within the private market. And whilst your default setting will always be back to electricity that is supplied by Eskom, there are a number of measures that have been taken by private citizens and companies to deploy their own renewable energy provision and supply.
I mean, often the law, you find that the law works in an interesting way, or certainly as a journalist I see it, where there'll be a ruling and a ruling and a ruling on, say, environmental rights, and then suddenly you realize it's not going to go any further than this, and it actually gets pushed back a little bit. Are we at that point in South Africa?
Potentially. I think it very much depends on the regulations that are published under the Climate Change Act. And I think if the regulations and the penalties actually have teeth, then I think we will see a change. But right now what we're seeing is a lot of social pressure that's being pushed down on various companies within supply chains to reduce their greenhouse gas emissions, whether they put them in scope 1, 2, 3 or 4, or they designate them as fugitive emissions. We're seeing a lot of social pressure being brought to bear on companies to reduce their emissions, and whether that arises from non-South African frameworks and standards, we are seeing that pressure being pushed down onto various companies, and they will not allow you to play within the space that you've created for yourself and other companies are playing if you are a greater emitter of greenhouse gas emissions, because that impacts on their supply chain. So they would rather have a counterparty that has a lesser carbon footprint than what you do, because that impacts their scope 3 emissions.
The law's one thing, Natalie, but when it comes to change, economics, eh?
That's very true. That's very true. But if you're out in the cold because you can't play, that will also impact on your bottom line. So I completely agree. I think from a from a legislative perspective, we don't have teeth right now. There are penalties that are mentioned in the Climate Change Act, and once it comes into force, we'll see how those play out. But right now, I think it's just the social compact and the requirement for companies elsewhere in the world, particularly to reduce their greenhouse gas emissions, which is then putting pressure on the South African companies. But I completely agree. We don't have anything very specific that other than potentially going to jail for a period of time or paying a huge fine that is going to dissuade companies from from becoming huge emitters.
If you want to play ball with us, you'll have to stop smoking first. Natalie Scott, thank you, Head of Sustainability at Werksmans.
702. Stephen is on X.
At Stephen Grootes.
8 minutes now to 7 the time. The Vukile Property Fund, they're reporting a 6% increase in their interim cash dividend for the 6 months to the end of September. Its vacancies are still below 2%. It's been able to retain 93% of their tenants. The company also saying it's building more sustainable power plants to power their shopping malls. Lawrence Rapp is the CEO at the Vukile Property Fund. Lawrence, good evening. Thanks for your time tonight. Keeping your properties full, retaining tenants, keeping such a low vacancy rate during quite a difficult time. How difficult has that been to do?
It certainly has been a lot of hard work. I think the team have done a tremendous job. And really, I think it's driven by the strategy we have is perhaps a bit different from many other property companies. We talk about focusing on the consumer, making sure that we're positioning our shopping centres at the very heart and centre of the communities that we're operating. And so really trying to understand what the shopper wants. And when you understand that and you build that affinity with a shopper, they spend more time in your centre, spend more money there, and that drives great results for your tenants. And that ultimately then is what drives positive rent reversions, low vacancies, high waiting lists, etc. And that then filters through into higher rents and better returns for shareholders.
So your unique
model is all about understanding the consumer.
All right, so your unique selling point, if you like, is that understanding of the consumer. You've put money into that research.
Exactly.
You say 85% of your leases have been signed at the same rental or better. Was a large proportion of those leases for the same amount? In other words, are you actually able to extract the full value for your properties in South Africa that you should be getting?
Yes, so when we talk about that, of the 85%, in fact, 77% of them were positive. So that means a tenant that's currently occupying that space and who is extending their lease is extending it at a higher rent than where they were than what they were paying, right? And that, I think, gives you a very good indication of the strength of the portfolio and how it's trading. If you're able to get those positive reversions. Many of our peers have not had positive reversions. But what's also been very interesting in this period is that the length of lease has increased. So the average, what we call WALE in the portfolio, the length, weighted average lease expiry, is sitting at 3.5 years. On new deals, that's sitting at 3.8 years. In other words, you're seeing a greater confidence from tenants to sign not only higher rentals with us, but for longer periods. And that is where, that is tremendously encouraging.
You have 15 shopping centres in Spain, you have 3 in Portugal. Europe does have its own economic problems at the moment. Are you able to retain clients there as well?
Well, Europe does, but in fact the powerhouse of European growth is Southern Europe and Spain in particular. So in fact, I think the Financial Times are forecasting that Spain will grow faster than the US this year. So the economies there are in fact very, very strong. We're seeing tremendous performance in those assets. Vacancies are sitting at around 1%. Exceptionally high positive reversions, all in all, collection rates at around 100%. So that market is trading exceptionally well. The consumer is in very, very good health. If you look at Spain, debt to GDP is at lower levels than historic averages, lower levels than the rest of Europe, and the saving rates are probably sitting around 13.8% compared to long-term averages of 8%. So Spaniards have been very cautious with their money and have built up reserves. And at some point when that comes into consumption, that's going to be a further boon for that market. And Portugal, I think, is sitting at around forecast 2% GDP growth. So that's also a very healthy, market to be in. So whilst, I think there is bad news out of Germany, out of France, certainly Southern Europe and Spain and Portugal in particular are looking very healthy.
You, like so many other companies, you've been rolling out your own sources of power, trying to get off the grid in South African terms. It does look like load shedding is done and dusted. We won't see it again. But I presume, like so many other companies, you're still going to continue with your rollout. And how strong is the economic case to do that, especially when Eskom wants another 36% for electricity?
Well, you answered the question. It's a tremendously compelling economic argument. And I think, the benefits really are driven by opting out of those, very high, tariff increases. And then obviously from an environmental perspective, it's, green energy far better for the environment. So economically, we get around a 15% yield on our spend in PV plants. So it is very lucrative for us and, very compelling arguments for us to keep investing over and above the load shedding issue, which is sort of no longer really top of mind. But it is a very profitable venture for us.
Do you think one day, soon, maybe tomorrow, every shopping centre in the country is going to be like this? Instead of parking lots on the roof, you'll have solar panels, or you'll have solar panels just providing shade for the cars. Is that the future of the shopping mall in South Africa?
Most definitely. I think I'd be surprised if there are many centres today that don't have it. You've got these very large surface areas on the roof. In our malls in particular, where a lot of the consumers are coming via taxi and public transport, those roofs are not used for parking. So they are very, very valuable spaces to use for PV panels. And certainly, using PV panels with car shade, etc., is also a common theme. In our Spanish market, for example, they have some fantastic designs. So they try and bring the aesthetic into that as well, to sort of complement the functionality. So most definitely that is, the way of the future.
Lawrence Rapp, thanks very much indeed. Good to talk to you tonight, CEO at the Vukile Property Fund. Well, coming up, we'll talk a little bit more about procurement in a government sector, and it's been such a problem. There's a new OECD study. We'll look at that, but it sort of confirms what the Zondo Commission already found. But still, you need to design a system that is transparent. Everyone can see it. You need to try and remove sort of the differences in the way that insiders and outsiders are treated. It's not an easy thing at all. We'll talk, of course, to Rotendo Hundingwi, and we'll find out a little bit more about finances at Christmas. In fact, we'll speak to John Manike, Head of Financial Education at Old Mutual, about that. You're with The Money Show. Good evening, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters series podcast. ABSA is an authorized FSP and registered credit provider. Good evening. Welcome to the second hour of The Money Show tonight. We'll talk procurement. And procurement is one of those things that when it comes up in discussion, in public discussion in South Africa, I kind of want to bang my head, because you just know that if you see a news headline that has the word procurement, the word scandal is afterwards. You just know that. There's no doubt in my mind. If you sort of Google procurement in South African news, you get the word scandal afterwards. And it happens time and time and time again. There's certain things that we kind of take for granted. And you look at the findings of the Zondo Commission. it's all there. We'll talk about that in just a moment. Reforming it is difficult. And let's just be clear about that. This is a problem anywhere in the world. The UK had procurement scandals at the start of the pandemic, for example. This just happens. Let's see what happens with the relationship between Elon Musk in the US and some of the people he's been hanging out with lately. We might see similar things there. We'll talk about that in a moment. We'll speak to Rotendo Hundingwi. He'll be talking about Cape Verde, by the way. I've actually been to Cape Verde. I'd like to thank the airline for leaving me there for 12 hours. But I have actually been to Cape Verde. And then, of course, we'll also talk about how you survive financially over the Christmas period. Good evening.
702.
702.
Stephen is on the Money Show.
6 to 8 p.m.
Well, news this week, the Organization for Economic Cooperation and Development making a few findings about our public procurement system. They say it's vulnerable to corruption and it's inefficient. If you'd read the Zondo Commission report, you'd probably have found exactly the same thing, particularly about the fact that it is vulnerable to corruption. Of course, the government procurement budget is massive. The scope for corruption is huge. Professor Geo Quinot is a procurement law expert at the University of Stellenbosch. Geo, good evening to you, sir, and thank you for your time. Do you agree with the OECD and I suppose then the Zondo Commission? Our current procurement system just really isn't up to the job.
Good evening, Stephen. Thanks for having me. Yes, I agree with both findings of both institutions. I think the OECD MAPS assessment that came out yesterday is really a very useful reminder and a timely reminder at that on evidence-based assessment that our public procurement system in South Africa is simply not functional. It on so many levels, just not doing what it's supposed to do. And that I think that it's a timely reminder for us to kind of speed up in responding to something, as you've just noted, we've known for some time. I think what is quite important for me in listening yesterday to the launch of the report is that very little of this is new. There are some surprises, some things that I think they've now put numbers on that I think is very important. But overall, the overall story is not new. We've known this for a while. It is, however, a little bit depressing that, all these years, and we are now talking years post Zondo Commission and the report, we still seem to be in the same position.
There's so many things that are sort of on top of each other. I imagine if you're going to, buy something for government, you have to follow the PMFA, the Public Finance Management Act, things like that. We have all of these systems, and yet in the end, I suppose they boil down to a person or a group of people making a decision about which supplier to use. And I'm presuming that's where the corruption or alleged corruption comes in. It's in that decision. Who makes the decision is always crucial.
Absolutely. Yeah. And people often ask, so how is it that we've got all these millions of rules? If you talk to anyone supplying to the state or anyone working in the state, they'll tell you that it's not easy to buy and sell around the state. So how is it that we've got all these rules and yet the system is just so easy to manipulate? But that is the answer in itself. We've got too many rules. This is what the MAPS assessments also found. The system we've got is fragmented. It's overly complicated. There are just too many nooks and crannies. And then as a result, it's easy to hide a lot of stuff. It's difficult to see when something is not right because of the overly complex nature. But as you say quite correctly, it really boils down to very simple decisions. People having to take decisions on what do we need, in what form do we need it, and from whom are we going to buy it. And it's in that very simple process that there's a lot of abuse and that we need to address. But apart from the abuse, and as you, I think, quite correctly, and I'm very glad that you made that point, that we are not unique. We shouldn't think that we are the special case in the world where we've only got corruption in procurement. It happens around the world. But apart from the corruption, what concerns me more is the lack of effectiveness and the lack of efficiency. We are a country where we cannot afford to let R1 go to waste when we talk about public services. And that's my primary concern. And I think there we're talking less about bad intent and talking a lot about inefficiencies, lack of capacity, lack of skill. And I think the report yesterday also very, very clearly brings that point home. And as I've said in a number of places, including yesterday at the launch, I really hope that our government leaders are now for once going to pay attention and capacitate the necessary units to deliver on a system that can actually turn every rand into proper service delivery.
So your phone rings after this conversation. The presidency saying, Professor, we would like you to join the presidential task team on public procurement. You have your first meeting. You wonder who it was in charge of getting the coffee. What's your first recommendation? You say it needs to be made simpler. Obviously, I presume transparency would be part of that. What kind of system should we be having?
Yeah, absolutely. So, I mean, first order of business, and in fact, we are doing this at the moment in the process of writing the regulations under the new act. But the first order of business must be to define very clearly a limited number of procedures for procurement. And that's, of course, a very fancy word. It simply just means buying, right? The state is just buying. How do we go about doing that? What are the steps that you need to go through? And there's absolutely no reason why we need to reinvent the wheel in South Africa. There are many excellent models out there that we can simply use off the shelf. But we need to stop wringing our hands and wondering about all of these things and get on with it. And that means taking a limited number of robust, simple, so that's not the fancy stuff, the simple mechanisms off the shelf and implementing them in South Africa so that everybody knows exactly what they should do. Very clear, very precise rules on how this should happen. That's the first order of business. The second one is to get a proper electronic digital data system up and running as soon as is humanly possible. And again, we shouldn't be reinventing the wheel. Those things exist off the shelf. We're not the kind of country where, we need to build our own e-system. We can just buy one. And we need to get that system. There are many options available. Get it implemented across the board as soon as is humanly possible. Do the training behind it to get people to be able to operate and shift our paper-based, bids in a box approach to a digital approach, because that will also help us to have sight of what we're buying from whom, how much are we spending, and that's then got a whole snowball effect into the whole system. So those are, for me at least, the priority things that I would immediately put in place.
How do you enforce or ensure transparency? And I mean, I think in our country, kind of, in a way, everyone needs to know who is doing business with government. That's just, I think, the nature of it. Maybe that's just my journalistic background speaking. But how do you ensure transparency?
You're absolutely right. That is exactly the way to do it. The starting point must be that when you are entering into a business relationship with the state, the default position is absolute open transparency, right? So nothing you put on the table is going to be secret. It's going to be confidential. Just forget about it. Whatever you put on the table is going to be made public. You do that physically by shifting the whole system into the digital space. So, where you actually submit your bid is digital. Where you win your bid is digital. Where the payments are made, where your invoices are submitted, all digital. All of that must be made available publicly in machine-readable format. And again, the standards for that exist. There's an organization called the Open Contracting Partnership. They're wonderful. They do all of these things for free. We don't have to design it ourselves. But publishing, and it's not just a matter of publishing, running the system in that digital format with the data in machine-readable format allows everyone then to keep quite close track of what's happening. And it brings us back to that very old saying, sunlight is the best disinfectant. So that enables then civil society, but also our oversight entities, the Auditor General, the Public Protector, any entity to themselves keep a close eye on what is being spent by whom, on what. And that's the way that you force transparency. And then, of course, the final step, I think, that we need to get more of, and we've recently seen important shifts in that regard, is real consequence management. If there are rules to follow, if you don't follow those rules, there must be consequences. And that applies both sides of the aisle, right? It applies to the public servant, just not either doing what they should be doing, and it equally applies to the supplier that's not supplying or that's gaming the system. Those should just be out of the system. And I think if we can, and those are not difficult things to do. If we do that, we can really make good progress in addressing these challenges.
You made the point it's been some time since we first got all of these recommendations from the Zondo Commission. I just don't know if the appetite is there. I know there's a new law, you're involved in drafting the regulations, but I don't know if the political appetite is where it needs to be.
I would hope that we are wrong in this regard. We do have a new administration, so let's hope there's a little bit more appetite. I certainly share your view that it is, if there is appetite, it's very low. If I look at the glacial speed at which this is done, and it's big money we're talking about, right? We're talking about R1 trillion a year spent through procurement. I would have thought we would do this with a little bit more haste. So I tend to share your sentiment, but we do see some progress now, and I would like to be optimistic. Hopefully also now that we've got a new government, especially a government where we've got different ministers and different portfolios who are going to be reliant on procurement working, that we will see the kind of internal pressures that will just make us move along a little bit quicker than what we've done over the last decade at least.
Professor, thank you so much. Professor Geo Quinot, a procurement law expert at the University of Stellenbosch.
The Money Show.
The Africa Business Report.
Dr. Rotendo Ndengwe, of course, founding director at Tribe Africa Advisory, author of Rumble in the Jungle Reloaded. Rotendo, good evening. I made the point earlier, I've actually been to Cape Verde. I didn't spend much time. There wasn't a social visit. There is a big holiday market there, though. But they are also a country that's been progressing. They've had a massive agricultural transformation.
Yeah, Cape Verde, a beautiful place. It's 10 islands, population of 600,000 people. So that's an average of 60,000 people per island. So it's an island, beautiful place. I think there's a lot of partying there. GDP growth is 5.1% per year. So it's actually one of those well-growing economies of the African state. But the point of discussion is that a lot of investment has gone into Cape Verde through with a focus on the blue economy through the UN, through the Food and Agricultural Organization. And I think it goes back 3 or 4 years. It's actually their investments, they've been over the 50 years. But a lot of focus has gone into desalination, which is quite expensive. But Cape Verde has attracted the UN, and they see there's a lot of potential in terms of upping what they call the social protection index of West Africa through Cape Verde. The average social protection index, and this is just an index in terms of economy making a positive social impact. For Cape Verde, it's around 13%, the global average that they should be targeting 40%. So it's a good story of desalination investment as well as agricultural investments that's happening on that small 10-island country, also with a strong Lusophone background, but a lot of potential to grow and make a social impact with regards to the West African region.
They've also had consistent growth, as I understand it. I mean, that's really the story. Our server capacity, it jumps, but power's becoming a major problem. I mean, I suppose it's just one of the issues. Computing requires electricity.
Computing requires it's a tripod factor. So just the recent report that has come out with regards to sub-Saharan Africa server capacity has shown that the average is growing by 25.8%, Stephen, on a year-on-year basis, which is great.
It's a huge amount, eh?
It's a huge amount, and one of the leaders apparently is Cote d'Ivoire or the Ivory Coast. The returns on investment or the revenues that they're making out of servers and infrastructure around server and data management is about 84.3% year-on-year from last year. So it's quite significant. The beauty of server investment is that from an Africa perspective, we've always said technology allows us to leapfrog over our problems, which is a blessing and a curse in one way. But from an infrastructure data investment, huge inroads be made by Rwanda, Senegal, Cote d'Ivoire. The downside or the challenge with that is that as you attract more investment in terms of data management, servers, etc., then you need to invest in terms of the people skills with regards to management. So software development and engineers and programmers. The challenge with that is that Africa is lagging behind. It's a good problem to have in terms of you're growing one area of infrastructure, but you need the skills. The countries that are leading with regards to skilling up properly are Ethiopia, which year on year has produced probably about 40% more software developers, which is funny because Ethiopia wouldn't think is one of the areas, but they've thrown a lot of money and investment around that. But having said that, so you create the infrastructure for data, you create the people in terms of the skills, but you need the power. Because what we know with data, it needs a lot of power. I went to one data power station recently, and the guys say that in terms of upgrading the data infrastructure to the latest technology, the amount of raw power that they need is 10 times. Now, the challenge with that is that I think the average in Africa in terms of downtime with regards to energy and power is 7.3 grid outages per month, which is, and with the whole thing about data and data infrastructure, it should be 24 hours. So 7 times during the week, if it's during the month when data is going down, it works against you. But ultimately, if we invest in the people, we've got the data demand and we've got the infrastructure and the power. And a lot of companies like Microsoft in Kenya have invested like $1 billion towards that. So there are a lot of positive signs, but ultimately it's a good problem to have in the sense that We're investing in people and infrastructure and growing the digital economy of Africa, which is a positive thing to do.
And then the terminal in Djibouti, the Dorale terminal, they've hit a massive record, and this is all about moving stuff.
Yeah, so Djibouti is a very small country. I think it's got a population of 1 million people. The funny thing about Djibouti, it's obviously northeast of Africa. There are 10 military stations there. So the Chinese are there, the Americans are there, the Italians are there, the Japanese are there. And the reason why they're all strategically located there is because of that route into the Gulf as well as into the Indian Ocean. So 2/3 apparently of the world's marine traffic passes through there. SGTD, I'll try and say the French name, Société de Gestion du Terminal Containers du Dorala. I've tried, I think I would have got 5 out of 10 for my French class. But one significant thing that has come out is that they measure the traffic volumes going through a port by the number of 20-foot containers. It's called a TEU count. And for the SGTT terminal, which is sponsored by DP World, by the way, has actually hit a milestone in 10 months of 1.1 million. 1.6 million units that have gone through. Now, just to give you a comparison, the biggest port in Africa, which is Durban, probably has about 2.6 million units. And for a terminal to take that amount of volumes is quite significant. A lot of it obviously has been driven by the military stations that are there because you've got all the big boys that are there. But just in terms of global comparison, the biggest port in the world in terms of terminal traffic is actually Shanghai, and that is 50 million containers going through. But from an African perspective, the opportunity that is here is that you've got a small country, its GDP is very small, population is very small, but it's realized that, guys, let us capitalize on the opportunity we've got here. And I think they're making about, Stephen, $70 million of turnover with regards to leasing out to all these big 10 multinational military bases, just in terms of giving them land and in terms of that perspective.
Sure. And then the EU's pledged a $96 million loan to Cameroon. That's to boost infrastructure there.
Yeah, so I never get excited about loans to Africa. Look, we need them, but there's always a catch to it. $96 million, and it's for the right reasons, Stephen. I mean, Cameroon is a great country. They've gone through a bit of a civil war in the last 2 or 3 years, the English against the French and that whole scenario. But $86 million from the EU to pledge towards infrastructure. And you realize there are a lot of these infrastructure projects happening in Africa. And if I was Wamkele, the Secretary General of the AFCFTA, I'd be heads over heels in terms of excitement. But coming back to Cameroon, $96 million. The downside is that last year alone, through corruption, they lost $184 million of investments or money that just disappeared of corruption. So you've got $96 million coming into infrastructure, $184 million that has been lost with regards to corruption. And that's always the dilemma we have in Africa. We're a great opportunity, but you've got these challenges. And I think until we're able to navigate and manage that through our leadership, both in the private and public sector, we're always going to be facing a challenge, Stephen. But ultimately, even a country like Cameroon with a population of 29 million, again, GDP growth 4.3%, relatively high compared to other emerging economies on the African continent. There's huge opportunity there with regards to growth.
I think got to fix your procurement system. Dr. Rutendo Ndwengi, thank you. Founding Director at Tribe Africa Advisory.
The Money Show.
Rumble
Personal Finance.
Reloaded. Well, with us this evening, John Manique, Head of Financial Education at Old Mutual. And he's asked, we have touched on this before, but it's such a big topic. There is so much to say about how to survive the festive season. And I mean, let me just start with the idea, John. Good evening. When you start off by saying, well, you need to plan. And I kind of think that planning's a January thing. It's not a December thing, but it's really a November thing, isn't it?
No, absolutely. Planning has to happen before the festive season. But again, as much as you plan, you still need some level of discipline, because you can plan, but then when peer pressure comes, with a lot of smart advertising out there, people tend to just forget about the plan. I mean, and it doesn't only happen during the festive season. It's heightened during the festive season. But, throughout the year, people tend to struggle with discipline. I mean, people budget, but they don't stick to it. What more when you're trying to budget and plan for the festive season and sticking to it is something else.
I mean, and I suppose there's a different vibe at the festive season, right? I mean, and that vibe makes you vulnerable to all sorts of things. It makes you vulnerable to spending too much money. It makes you vulnerable to being ripped off and just being stolen from.
No, absolutely, because I don't think we are as alert as we are in any other month, particularly in the festive season. I mean, I had a look at some stats. I think it was the 6th annual summer spending survey, although it was done in 2023, but I think it makes some interesting reading. I mean, the fact that South Africans were expected to spend about 224 billion during the festive season. I mean, that's huge. And about a third of that spending is actually food and beverages.
It's an incredible amount. Do you need to be a bit more careful about handling money at this time?
Well, I always want to say that it's a discipline that we need to practice throughout the year. It's difficult to try it for the first time during the festive season, but it is certainly a necessary evil to do. I mean, if one wants to call it that, because when you talk to people about budgeting during the festive season, it's like you're asking them to sacrifice their lives, because it's not something that people are used to. Because we have a culture of celebrating by giving each other gifts, exchanging gifts, and having a braai and having family around. So that discipline is quite compromised, because there's a lot of peer pressure, and of course coupled with some smart advertising out there.
Yeah, peer pressure is the thing. Hey, I think social media has made it worse. There used to be a time when a lot of people get a year-end bonus.
Yeah.
I mean, sometimes you do. I don't know, but what's the best way to manage it? I mean, you suggest that you should actually split it up.
Yeah, look, definitely. You should try and split it into savings. Use some of it for savings. Use some of it to settle your debts. And then maybe you can then actually put something aside for the festive season. But I mean, when I look at the survey that I referred to, I think in 2023, about 40% of the respondents said they would be spending from their bonus. It's not a common thing. I mean, a lot of employers are phasing out the so-called 13th check. But the irony of it, it's called a 13th check, but it doesn't last until the 13th of December.
It doesn't, does it? You've also got to manage, what comes after December. So you've got to manage school uniforms in January and things like that. Good idea to get that done as early as you can.
Stephen, you'd be amazed how many responsible parents are still out there who actually buy stationery in December. I think that's a smart thing to do. What I don't get, though, is why is it that, when we have Black Friday, you hardly see Black Friday specials on stationery. I guess the retailers know that, well, whether we like it or not, people have no option but to buy stationery. Whether they have the money or not, they will find money, whether by borrowing or whichever means, but, parents will still buy. But I think it's a smart thing for parents to buy stationery in December before even the January rush, where people are preparing for school, the kids for school. Yeah,
I mean, it's the age-old thing. Have your vegetables before your dessert, and if you pay for the vegetables in December, the dessert's going to taste better.
No, absolutely. Look at this. I think there's quite a number of people who find themselves getting into debt because of their financial misbehavior in December. I mean, I do recall one lady one time who called me and said, listen, I had a problem where the bank wanted to repossess her car, and she was trying to run away. She had all sorts of tricks to run away from the bank. And she called me and said, but do they have to take it? So, before we went I asked her, when did this problem start? And guess what? She said it was during the festive season. She said she withdrew all her salary before her debit order. So she didn't pay her bond, she didn't pay her car, she didn't pay insurance, and then she went on a spending spree. She thought she'll try and catch up in January, and then she realized that actually it's double. She didn't calculate. Then from there it was downhill from then onwards, and even her bond was under pressure. So people make a lot of mistakes during that. But if you can start by paying off, not paying off, but at least paying your monthly debts, pay your rates and taxes, then what is left if you really have to, increase the budget, then you can work on that. But the biggest mistake you can make is to actually spend money during this festive season without paying your normal debts, and especially because a lot of people get paid early in December, around about the 20th. I mean, payroll wants to close. Now, that's why you find people ending up spending 2 salaries in 1 month.
Sure. We're speaking to John Manika this evening, Head of Financial Education at Old Mutual. 011 8830702 021 4460567. How to survive the festive season. Black Friday this week. I think it's this week.
Yep.
People in my family were telling me it was. What's the best way to make sure that you actually manage yourself? Because it's very tempting. There's a lot of stuff out there, stuff you could never have dreamed of owning, maybe stuff that your mom could never have dreamed of having in her house, and suddenly you want to buy it for her. I mean, what's the best way to avoid getting yourself, in a situation where you're not paying your debts?
Yeah. So firstly, don't follow the crowd. Follow your plan. If you've always had a plan to buy something, of the Black Friday weekend, well, some are even starting way before the so-called Black Friday. So if you are clear that, okay, maybe you want to buy a bed or you want to buy some appliances that you've always wanted but you couldn't afford, but stick to that plan, that 1 or 2 items that you've always wanted to buy. Where the problem is, maybe you wanted to change your bed, you wanted to buy a new bed. But suddenly you see this flat screen TV going for, they tell you it's 50%. You don't have a budget for it, but the discount is there and you're thinking, oh my goodness, I've always wanted this, but you don't have the money. Then what then happens is people tend to dip into the credit card, but what you don't realize is that the interest you're paying on your credit card, and especially if you're not going to be paying it, settling it within that period where it's interest-free, then that interest is actually eroding the so-called bargain or discount that you got on there. So you have to stick to your plan. And also remember that Black Friday is not time for window shopping. If you don't have the money, don't go there.
I mean, it's the age-old thing about planning and control, knowing what you can do and knowing what you can't. And I mean, I know some people who plan for Black Friday from January. They know exactly what they're going to buy and how they're going to do it.
No, I mean, indeed, if you can start in the beginning of the year and put something aside every month, I mean, just forget about it. You say, this is my festive season budget. Stick to that plan. I think you will have a better festive season. Unfortunately, it's too late now if you didn't start early in the year. And if you think you're going to be relying on your bonus, but without prioritizing other things, I would rather set myself up for a good start of the year by, killing 1 or 2 debts. Then I know that my monthly installment would actually reduce, in the beginning of the year, rather than using all of it. Of course, there are other people who say, look, I'm not a bonus person, but, remember the stock fellas are also getting their payout. And that's another thing. But even there, I still question, is it really savings if I've simply delayed spending in order to go on a spending spree during the festive season, and I just splash all of it? Yeah,
doesn't mean anything by January, it's done.
Absolutely. And I think the other thing that people need to be cautious of, especially during the festive season, is that, particularly for people who intend to buy perishable goods, look at the expiry date. If I were a retailer and I've got a lot of stock, I know it's going to expire. For me, look, I'm not doing anything wrong if I'm selling it where there's still a bit of grace in the expiry date. But the fact that I don't give you a longer runway, meaning maybe the expiry date is 30 days or 2 months, it might not be enough, especially if you intend to buy some of those things in bulk. So people need to check the expiry date on the goods that they buy over the Black Friday season. Yeah,
I'd never have thought about that. That's really good advice. This is the first Christmas where you have the 2-pot pension system. He's not laughing out of fun, by the way. He's got a pained expression on his face.
Absolutely. I heard people saying there's a 2-pots party. I mean, some of the clubs, they have a themed 2-pots party, and it is certainly for others a 2-pots festive season, if they haven't used it already. I don't think it's really a good idea, because you're actually borrowing from your future in order to entertain yourself now. But unfortunately, it's a pain you'll have to deal with it at a later stage. Not a wise thing to do.
I mean, I sometimes wonder if maybe November and December you're not allowed to take money out. You know?
No, people will take it to the Constitutional Court.
Of course they will. Do you worry that actually we might find a lot of two-pot money is taken out during this period? And I mean, it's just wasted, really.
Well, I think the excitement of the two pots landed in such a manner where people were so curious and they wanted to get this money. So a lot of people would have applied within the first month of it coming into effect. So, I mean, unless if somebody maybe for whatever reason there was a delay in getting the payment, or maybe there were SARS issues and you're only getting paid now, I think a lot of people have finished that money. I think it's only memories now of that two pots.
Also, the stories of how much tax you pay when you get it out might be circulating. People might suddenly realize what actually happens when you do it.
No, look, but I think people have numbed themselves. As long as I get this extra cash, whether or not the taxman would have taken a portion of it, for them it's neither here nor there. But as long as they get something. But when you really look at it, it's not a wise thing to do.
We're speaking to John Manika this evening, Head of Financial Education at Old Mutual. How to survive the festive season financially. Good to hear from you on 021 446 0567 and 011 883 0702.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters series podcast. ABSA is an authorized FSP and registered credit provider.
The Money Show.
Personal finance.
John Manika is Head of Financial Education at Old Mutual, talking about surviving this particular week, Black Friday on Friday, and also, of course, the festive season financially. 011 883 0702 021 446 0567. So, John, look, I mean, a lot of us have children in our lives that we care for. We want to make them happy. They want certain things. Those things cost money. How do you have that conversation with them? How do you start a conversation of saying, look, I know you want that watch or you want that PS5 or whatever it is, but actually we're not doing that. Or how do you keep it real for them?
Yeah. I think for kids, you have to make things very practical. One thing about money, it's amazing how, financial behaviors are so connected to things we believe in, our values and all that. It all also depends on what type of values we teach our little ones, and how we capitalize on things they love the most. I mean, I'll use my son as an example. He's 12 years old, and at one stage he because he used to break his phones almost every month. But he wanted a tablet. So he realized that he's not going to get his way. And then he decided, no, Dad, I'm going to start saving because I want this tablet. I know you're not going to buy it for me because I keep breaking them, but I want to contribute. I said, how do you want to do it? He said, no, I want to wash your car. He's 12 years old. I said, fine, but you're short. He said, no, I'll work with my brother. He's taller than him. So the only reason I'm calling him is because he's taller. So he can help to wash the car. So you can give us that. Fine. We agreed on that. So he identified other opportunities to make money here and there, and then we started working on a plan. But he was saving his own money, even though sometimes he gets tempted, he will want to use it at school. But I appreciated the fact that it's a very practical conversation, something that is relatable, and it's linked to something he's very passionate about because he wanted this thing so badly. I think that's how parents need to make this teaching of finances very practical. It shouldn't be a theory. You cannot talk like you're talking to as somebody who's at tertiary. Talk to them and be as practical as you can be.
We speak to people about their money journey. We have a feature called My Money on a Monday, and one of the questions I often ask people is, when did you first realize what money was? And there are a few interesting responses that people give, depending on where they come from in our society. For some, it's when I started to get pocket money. For some, it's when I went to school and I couldn't get the whatever. For some, it's when I realized there were people richer than me, or that most people were richer than me, actually. It can be quite a hard thing to talk to a child about, to say, you can't get this even though the other child in your class can.
Yeah.
How do you even start that conversation? Because it'll happen over Christmas.
Yeah. So look, money is an emotional thing, honestly speaking. Money is an emotional thing. That's why some people's logic just doesn't exist because of emotions. So if you can work with those emotions and try and channel them accordingly, and I'll give an example. If you were to help somebody who wants to save for something, if I were a financial advisor and I was speaking to a client about saving for children's education, I would tell them, you name this education policy name it, but give it the names of your children. So every time you make your monthly contribution, you say, no, I've paid the contribution for Kiamokhetsi, Kabelo, whatever the name of your child is. Because what it does to your psyche is that if you're tempted to dip into that savings, you're thinking, I'm now dipping into my son's education. So when you link your financial goals with your emotions, it just slaps differently. The saving thing becomes something else because you're passionate. You have to have an emotional relationship with those goals. So I just think maybe we're downplaying the role of emotions when it comes to financial planning and how we handle finances.
That's such a good idea. I mean, you're never going to take money out of your child's, if it's called your child's name.
Yes.
You're never going to, I mean, you'll be ashamed. Sure.
Oh, absolutely.
Is it a good idea when you talk about money with your family, do you have everyone or do you do it one-on-one? I mean, sometimes if children are different ages, you need to have different conversations. A 16-year-old should get more pocket money than an 8-year-old, but the 8-year-old's not going to see it like that.
Yeah.
But you need to also be honest. Everyone needs to know where they are in a family.
No, look, I think it's good to have a conversation with a family. It could be at a dinner table and where you discuss finances. But of course, as a parent, you have to use discretion. There are things that you can't share with your kids. For example, when you know that the Reserve Bank has not been kind to you with interest rates and the bond is under pressure and maybe you're in arrears and there's a threat of losing you cannot be going to that extent. You need to protect your children. But there are things that you can have fun having conversations about money. With your kids. The thing is that when you remove fun out of it, then it's not fun for the little ones. And I think those are things that parents need to look at. But the problem is that couples themselves don't talk about this money thing.
Yeah.
Because it's also an emotional thing. So it's very hard to have a conversation with children when you, as husband and wife, are struggling to deal with the topic yourself.
A lot of children, they will see that money is valued and that people with money are valued. How do you start a conversation over Christmas about what values are and how they shouldn't be related to money?
Yeah, so I believe that some conversations need to happen way before the festive season, so away from this clutter. Because, to try and educate children about finances in the storm of the festive season is certainly not a good idea. There's just too much noise. And you're going against the tide. So I believe that it's a conversation that needs to happen throughout the year, but put some fun in it.
I suppose in a way, this is also a time when a lot of children will be going out and they'll be going out for the first time with money. So suddenly money becomes a real big thing for them. They'll know what that is. They'll know what it buys them. They'll know what it doesn't buy them.
No, true. Look, it goes back to that point that, it works. It's almost like going to an exam you didn't study. You can't expect miracles there. But if we're consistent as parents in having these conversations throughout the year, then it's a time to practice what we've learned throughout the year in the festive season. So, but to throw children in the deep end and say, look, you see how you swim during the festive season, definitely not a good idea.
So much is going to happen over the next little while. The spending that we see now has a big impact on the economy. Every shop is planning for this weekend.
No, absolutely. Look, it's good for the economy. When you look at such numbers, the numbers we cited earlier about in 2023, where South Africans were projected to be that we would spend about 224 billion. That's a lot of money. We need that, because the fiscus is under pressure. If we don't want the Minister of Finance to keep coming back and with tax hikes, then we need this kind of thing. So look, it's one of those things where yes, the economy needs it, but at the same time, we need to make sure that there's responsible spending out there. But if we're going to be spending on things and we're not dealing with our debts, we're just spending for consumption. It's certainly not going to help us. I don't know if I did make mention of the stats that about a third of the consumption during the festive season is actually food and beverage. So you can imagine in the retail space and in those sectors, I mean, certainly they will be doing well. They'll be smiling all the way to the bank, and so is SARS.
I mean, I suppose also it's just about learning what it's worth spending money on, and the idea that one of the biggest presents you can give to yourself is to be debt free. I mean, imagine planning that over a December.
Absolutely. Well, we must also say to people, there's nothing wrong with having debt. It's what kind of debts do you have, and are you using that debt to actually create wealth? So, I mean, if anything at all, really, and you got a bit of extra cash, look at which debts you want to kill so you can start better ones. I mean, if you're planning to be buying property, that's a good way to go.
John Manike, thank you very much indeed. Really appreciate it. Head of Financial Education at Old Mutual.